Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers on this beautiful Sunday, April 5th, 2026.
Absolutely. We're here to dive into the market data we crunched for you yesterday, Saturday, April 4th. Today's analysis flagged a couple of interesting stocks that garnered a fair amount of attention across various discussions.
That's right, Brooke. We saw a decent number of posts across a few different companies. The overall sentiment is, well, it's a mix. One company is showing quite a promising outlook, while another really brings us back to focusing on the risks. Let's dig in.
All right, let's kick things off with Micron Technology, ticker MU. This one had a significant buzz with 21 hot leads flagged.
And for good reason, Brooke. The sentiment for MU is overwhelmingly bullish. We're seeing discussions where people are expressing regret for selling early, celebrating their current holdings, and even making new bullish options plays. One user, for instance, talked about still holding 500 shares and how good that feels, and others are pointing to a potential memory shortage lasting until 2030, which, well, that's a huge tailwind for MU. They're even asking, is Micron the new NVIDIA? That kind of excitement, especially with their focus on high bandwidth memory for AI, really paints a picture of massive growth potential.
Hold on a second, Ethan. While the sentiment is indeed very positive and I see the regret, we need to look at the numbers and validate that optimism. The current price is around $366, which is significantly up from its 52-week low, but it's still about 22% below its 52-week high of $471. So yes, potential for recovery, but not with some ground to cover. But Brooke, think about the underlying strength. The net profit margin is exceptionally strong at 0.41, and their EPS is a robust $21.21. Plus, their PE ratio at 17.26 is relatively reasonable for a growth stock in the tech sector, especially one playing such a pivotal role in AI. These aren't just speculative hopes, these are strong fundamentals backing the excitement. I'll grant you the strong profitability metrics, Ethan. Those are certainly impressive and validate some of the user optimism. However, my models also flag a debt-to-equity ratio of 14.90, which is high and definitely warrants attention from a risk management perspective, although the corporate actions mention management addressing this through a long-dated debt buyback. And to your point about confidence, the insider trades are a huge positive. Insiders have increased their holdings by over 31% in the last 6 months, which is a strong bullish signal. Exactly. When insiders who know the company best are buying that much, it's a powerful indicator, and the news aligns perfectly. Their strategic AI capex push and focus on HBM position them right at the heart of the AI revolution. If this memory shortage materializes as some suggest, and with their debt buyback plan, we could see a significant positive shift in their revenue, EPS, and profit margins. We last rated MU as a stay away on April 1st, but with all these factors converging, I think we have a clear path here. I concur, Ethan. The strategic alignment with AI, coupled with the strong profitability, reasonable valuation, and critical insider confidence, presents a compelling narrative for potential future performance. The high debt is a point to monitor, but the proactive management response and future catalysts could improve it. So for Micron Technology, MU, our AI-generated insights lead to a clear verdict: buy. Next up, we have Rocket Lab Corporation, RKLB. This stock also garnered some attention, with 10 hot leads. While it had some buzz, the analysis shows a milder bullish sentiment, and predominantly for speculative reasons, Ethan.
Well, the community is looking at RKLB as a sympathy play for the upcoming SpaceX IPO. People are anticipating that sector-wide hype will lift all boats in the space industry. We saw comments suggesting it's one of the space stocks that will move ahead of the IPO. And frankly, there's some good news for RKLB specifically, like their HASTE missions pointing to defense upside and a clear path to 2026 revenue growth. Their historical performance shows a strong upward trend from $15 in April 2025 to $60 to $70 in April 2026. That's significant growth.
That historical price appreciation is certainly notable, but let's zoom out and look at the underlying financial health. My KPI dashboard for RKLB flashes quite a few red lights. First, profitability, a net profit margin of negative 0.32, negative EPS, and a negative operating margin. The company is currently operating at a significant loss. Positive revenue growth is great, but if it's not leading to profit, that's a serious concern for long-term viability. But the future potential, you have to factor in the backlog and the defense contracts. Those could be game changers for profitability further down the line, right? They could be, Ethan, but the current numbers are what they are. Furthermore, the debt-to-equity ratio is extremely high at 15.39. That indicates a very high level of financial leverage and significant risk. And then there's the price-to-book ratio, which stands at a whopping 21.37. For an unprofitable company with high debt, that valuation appears disconnected from its fundamental value. It suggests the market is pricing in an enormous amount of future potential that hasn't materialized yet. Okay, I hear you on the valuation points, but the general space sector momentum, Artemis 2, lunar missions, all of that creates a positive backdrop. It's an exciting sector. Excitement can drive short-term price movements, absolutely, but it doesn't change fundamental performance. And perhaps the most concerning KPI for me is the insider activity. Over the last 6 months, insiders have been net sellers, offloading over 3.6 million shares. That's a strong bearish signal when those closest to the company are reducing their holdings. We rated RKLB as a speculative gamble on April 2nd, and given these critical profitability and debt issues, despite the community's mild optimism, the fundamentals haven't shifted to warrant a change from that highly cautious stance. So, while the community sees that speculative upside, the hard numbers are painting a different picture. Precisely. The core financial health simply doesn't support a buy rating for long-term investment. Understood. For Rocket Lab Corporation, RKLB, our AI insights and careful analysis lead to a verdict to stay away. So to quickly recap our analysis from today's market commentary, here are the stocks that stood out. This is your compiled list for deeper personal investigation, folks. Investigate as buy, Micron Technology, MU. Investigate as cautious buy, none. Investigate as speculative gamble, Rocket Lab Corporation, RKLB. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in to the Daily Hunt for Multibaggers.
We'll catch you next time, Hunter.